All right, today we're unpacking a pretty seismic shift in the tech world. It's a disruption that happened so fast and was so powerful that it earned the nickname the SaaS killer.
And this is really at the heart of our story. $285 billion. In early February 2026, that's how much value was just wiped off the global software market. And it happened in just a couple of days. So you have to be asking, what on earth happened?
Well, the event was dubbed the SaaS apocalypse, and this chart, it really shows the damage. I mean, just look at the one-day drops for these huge companies. LegalZoom down 20%, Thomson Reuters down 17%. Even the giants like Salesforce and Adobe took a 7% hit. It was an absolute bloodbath, and believe it or not, it was all caused by a single company.
So, let's meet this so-called SaaS killer. It's actually a pair of AI agents that came out of the company Anthropic.
Anthropic's strategy was kind of like a two-pronged attack. First, they had Claude Code, which was this super powerful AI engineer for developers. And then there was Claude Cowork, and this is the one that really changed the game, because it brought all those same incredible capabilities to everybody else. You know, professionals in finance, legal, marketing, you name it.
Now, the key technology that makes all of this possible is something called agentic AI. And this is not just another chatbot that answers your questions. An agentic AI can take a really complex goal, like, say, review this entire contract for risks, and then it can proactively and, this is the key word, autonomously, figure out all the steps to get it done. You don't have to hold its hand. It's a doer, not just a talker.
And just look at how fast this all went down. So Claude Cowork launches in the middle of January. Just 2 weeks later, Anthropic releases a set of these specialized plugins. And then, less than a week after that, boom, the market just goes into a total freefall. The trigger wasn't the AI itself, but what that AI could suddenly do.
So what exactly were these plugins? Well, they were essentially 11 autonomous agents that could turn a general-purpose assistant into an absolute specialized powerhouse. And here's the crucial point, right? These plugins were not designed to help you use your old software better. No, they were designed to automate entire workflows, and in a lot of cases, the actual jobs of the people doing them.
Just take a look at these capabilities. You've got the legal plugin, which can review contracts all by itself. The finance plugin can prepare journal entries. The sales plugin, it researches prospects and even drafts the outreach emails for you. Every single one of these plugins was aimed directly at a specific, high-value business function that used to be served by its own specialized software.
So how'd they work? It's actually a simple but incredibly powerful three-part formula. First, you've got skills. That's the built-in expertise. Second, you have connectors, which are just secure links to a company's data, in Salesforce or Slack. And third, simple / commands. If you've ever used Slack, you know these. They're just little text shortcuts that can trigger massive, complex workflows with just a single line of text.
And all of this leads to why investors started panicking. The market's violent reaction wasn't just about some new product. It was a fundamental shift in how investors saw AI's role in the entire software industry.
This right here is the absolute key. For years, investors saw AI as a feature, something companies like Salesforce or Adobe would add on to make their products a little bit better. But Claude Cowork showed that AI could now be a foe, a direct replacement for those very products.
And once they realized that, it created three huge concerns. First, the whole idea of seat-based revenue is suddenly at risk. I mean, why would you pay for a DocuSign license for everyone in your legal department if one AI agent can just do the work? Second is service substitution. Companies can now just buy the outcome they want, like a finished contract review, instead of buying the tool to do it. And third, Anthropic proved you could disrupt these niche software companies with what are basically just folders of prompts, not years and years of complex coding.
Analysts even gave this new paradigm a name. They started calling it service as a software. It's a complete flip of the old model. You're no longer paying a monthly subscription for a tool. You're just paying for a finished result delivered by an AI.
So what's the bigger picture here? Well, this isn't just about software anymore. It's really about the emergence of a brand new kind of economic actor.
And this slide just tells the story perfectly. On the left, you see the devastating impact on all those legacy software companies. But on the right, you see the story for the disruptor, Anthropic. A valuation that just went absolutely parabolic. It was a massive transfer of value from the old guard to the new.
Let's just focus on that growth for a second. By early 2026, so just 6 months after its big push, Anthropic's private valuation had skyrocketed to an astonishing $350 billion. The market wasn't just punishing the old players, it was placing a massive, massive bet on the new one.
And this wasn't just speculative money either. The biggest names in tech and venture capital were all in on this. Microsoft, Nvidia, Sequoia Capital, Coatue. They saw this huge structural shift happening, and they moved billions of dollars to make sure they were on the right side of it.
All of this leads us to our final and maybe most crucial concept. We're now dealing with AI as an autonomous economic actor. That's a system that doesn't just assist humans in doing valuable work, it can perform that work all by itself, independently. And that fundamentally changes how entire industries and careers are structured. Which leaves us with this final critical question. The entire software as a service industry was built on selling tools to human workers. But when the AI becomes the worker, what software is actually left to sell? That is the multi-trillion-dollar question that the market is desperately trying to answer right now.